Udayan joins in now into our conversation. Hi Udayan, good morning. Good to see you in as always. It's been 4 or 5 days of sluggish to a downward move on the market, and there are many reasons cropping up for it: earnings, elections, etc. But how would you approach this first phase in the next, say, couple of months for the market now?
Hi Sonia, good morning. I think it's no surprise, as you discussed, that the markets have corrected a little bit. I would even submit that if it was not 3 weeks before election, 3 weeks before the budget, the markets would have corrected some more. I think at this point in time, with such little time to go before such an important event, investors or serious investors would not like to get out of the market. I think the budget is acting as a bit of a support for the market at this point, and it's preventing any deeper correction because of issues like earnings which have cropped up. So I think at this point you would have to say that the market seems, fundamentally speaking, a little ahead of itself on the basis of what we've seen over the last 10 days or so. And it would not have surprised me if the Nifty had shed 200 or 300 points more in response to some of the fairly ugly earnings which have come in. So the markets might choose to consolidate at this point in time. It may not give you a very significant correction before the union budget. Depending on some of the events which are stacked up, like local elections in Delhi, you might see those sharp 100, 200 points movement on the Nifty either side. But I think the bigger move of a 10% kind might happen only after the budget, once the market has the confidence to either go long on the on stocks for about a 1 to 2 month kind of period, or it says, I am disappointed, first the earnings and then the budget, and perhaps the RBI to follow, which paves the way for a far more meaningful correction. At this point, I think we are a holding structure in the market, maybe with a marginally little bit of downside at this point, given how the earnings picture has panned out.
Hi Udayan, good morning. Well, what you're saying is that there isn't any more of a pre-budget rally left. What we saw up to 8,993 about 6 days back is it? Or do you think after the Delhi elections, there is still 8 trading days of clean ride? Another attempt won't be made towards 9,000?
Of course, it's possible, Lata, particularly because of the emotive nature of the Delhi elections. I don't think it's a major event for the market as such, but the market is watching out for it. And if you do get a BJP victory, it's possible that that rekindles some kind of a pre-budget move, which takes the Nifty beyond 9,000 even before the budget. It's entirely likely. On the other hand, if you do have a setback from market point of view, which is that the AAP steals a march over the BJP, it would not mean much materially in terms of the economy or for the market, but it might just give the market one more reason to correct a bit more. So earnings plus a mild disappointment from the credit policy, plus a milder or a slightly bigger disappointment from the Delhi elections might pave the way for the Nifty to sulk a little bit more, maybe not fundamentally justified, but it might ease down to 8,500 kind of levels, and then wait to see what the budget has in scope. So it's possible you're now at 8,700-ish. It's possible that you go to 9,000 plus if the events of the next 5 days play along expected lines for the market. If it does not, you may sulk and slip a little bit more. But essentially, I'm saying 8,500 to 9,000 seems to be the kind of range before the event is out of the way.
Okay. Every market eventually rises on earnings, Udayan, and that has not picked up yet. Will that not be a deterrent for the market up move in the medium term, especially since key sectors like banks are showcasing stress?
That's an important point, Sonia, and that worries me a little bit, the fact that most of the economy sensitives have disappointed this quarter. It's all very fine for a few IT and pharma stocks to hold up the Nifty at a certain level. But my sense is that this rally is not about some of the exporting sectors. They might play their role in holding the Nifty up, but if this is going to be a bigger bull rally, then it has to be led by the economy sectors. So you cannot have a situation where banks, infra, auto and consumers actually drag the market with earnings and the market still continues to move ahead. I would be very surprised if that happened. So in that sense, the way the Indian economy-centered sectors have performed in the current quarter is a cause for concern. And at another time, if it was in the middle of the year, I think the market might have corrected some more because of the disappointment factor. At this point, the general sense is that, yes, we are disappointed with the earnings, but earnings will pick up in the next couple of quarters. So a little bit of willing suspension of disbelief, if you will, with earnings at this point, hoping that announcements from the government and reforms will sort of take away the negative edge and convince the market that whatever the government is doing is going to bear fruit with earnings as well in a couple of quarters' time. So that's where we are. That's where it is at this point in time. But I take your point that with every passing quarter, with the way the markets have moved, we are trading at valuations which seem fundamentally slightly uncomfortable because of the gap between earnings and valuations. So if the budget does not deliver for some reason, I think a 10% correction cannot be ruled out. That would be a buying opportunity for sure, but I think that kind of correction might materialize because of the constant testing of patience that earnings are doing with investors.
Then if you're a betting man, how would you bet post-budget? I mean, I'm asking you because from the way the government has performed in the last 10 months, it seems more an incrementalist, mending the tears, as it were, not really looking for, dramatic moves. Going by the record as you see it over the past 10 months, will the market hold after the budget, or is it more likely to see profit-taking?
It's a very difficult question, Lata, to answer, because I think the government understands as well the importance of putting out a good budget this time around. The market is in a situation where it wants to believe that the government will deliver. So I think the market is prone to accepting the budget with green eye shades, if you will.
Okay.
Even if you give it a little bit, it'll say, see, we told you the government is proactive and will actually take India places. That's the kind of mental framework. It's not a pessimistic framework from the market at this point in time at all. So if the government takes one step forward in the budget, the market will read it as 4 steps forward and pave the way for some kind of a rally. That's what the market is daring to do. So it will have to be a really disappointing budget, followed by some sulk from the Reserve Bank governor saying, I did not get what I was looking for from the government. I need to be cautious with my rate cuts from here on. If that materializes an utter disappointment, as I said, it's very easy and conceivable that the Nifty goes back to 8,000 kind of levels. At that point, the serious money will still walk in, and it should, because it would be a deep 10% kind of correction, and valuations would have contracted quite significantly for many parts, particularly banks, which have already corrected in many cases 10%. Another 10% would bring them to attractive zones. So I think you will see value buying coming in if the market does correct significantly post-budget, which is certainly in the realm of possibility. But to predict an event and how the market reacts to an event before it happens, and I think it's fraught with a lot of hazard. So it's just impossible to do that.
Do you think banks have lost leadership for good now after that fairly, bad set of NPL numbers, even from ICICI? And now, of course, even HDFC Bank has already soaked up 10,000 crore in equity. So you think banks will find it difficult to give leadership?
Well, you ask if banks have given up leadership for good. That's a scary question.
No, not good. I mean,
give up leadership
next
for
few
good.
months.
Well, then the markets had it. I mean, if you tell me that the bank Nifty does not move above 20,000 in 2015, calendar 2015, then I think the Nifty will struggle to close above 10,000 in 2015 as well. Banks have to lead. But I think the correction in banks has to be seen in the context of what they've done over the last 12 months. Banks are overowned. Banks have doubled over the last 12 months in most cases. That's the legacy of what has happened in the near past with banking stocks. Valuations have expanded. They've been complete terrific outliers in terms of performance. Public sector has also catched up in the last few months. In that context, after an earnings disappointment and a scare that asset quality problems will take longer to sort out, to soak in a 10-12% correction is no big deal. I think some of the frothy ownership is coming off. Maybe realization is dawning on a few people that banks can fall as well, because banks have looked frankly invincible over the last 1 year or so. So I think it's a little bit of shaking out of ownership, some compression of valuations, which is overdue because banks have become expensive in parts, and therefore a little bit more of a correction can happen. After 4 quarters or 5 quarters of outperformance, if banks consolidate for a little bit, they don't need to correct very meaningfully. But as you suggest, 4, 5, 6 months of not beating the market by a wide margin. I'm talking about the bank Nifty. I think it's absolutely par for the course, particularly if earnings turn out next quarter like they were this quarter. So banks might actually catch their breath for a little bit like IT did a few quarters back. But I wouldn't rule out banking outperformance later in the year again, maybe towards the fag end of the year. As I said, if the Nifty has to go up sustainably over a period of time, there is no other way but leadership from the economy sensitives, and banks ranks on the top of that list.
So just for the near term, Udayan, do you believe that we could get leadership from other pockets? Because we have seen, names like L&T, Tata Motors pick up quite a bit in the last couple of days.
We could get support from other quarters, Sonia, but I don't think we'll get terrific leadership which will take the Nifty places. So you could get a couple of IT stocks, a couple of pharma stocks, a couple of high-quality financials as well, some oil and gas. Some of these names are actually preventing deeper downsides in the market. But to talk about leadership which takes the Nifty up 5-7% from here because of some of these plays which are doing better than others, I would find it difficult to imagine that kind of scenario. But I think leadership has to come from the same pockets which led the market over the last 5 or 6 months. In that, the names that you mentioned, I think the market's taking a hard look at some of these numbers, not just banking. But you look at what happened with Crompton Greaves, it's not a great sign that order book is not picking up. So it's a combination of events. It's like the market saying, so many months have passed. Everybody's talking about a hopeful scenario, but order books are shrinking. We are not seeing the kind of volume growth that some of the consumer-sensitive sectors like autos or even some of the consumer names, FMCG companies, are showing. And capex is not picking up, which means CEOs don't believe that volume growth is just 3 months down the quarter or 6 months down the quarter. So these are some of the areas which are worrying the market a little bit, and very justifiably so. So let's see how things play up once these triggers of the next 3 weeks pan out as they have to, and then we'll take a call on the market. I think it's still very much buy on dips market, but whether the dip is only 200 points or it's 700-800 points, we'll find out after these triggers play out.
Okay. We didn't ask you your take on the global scenario at all. The FI flows have come in fairly good, except for minor selling, maybe for 2 or 3 days. What's your sense with so many central banks printing notes and big global pockets still showing degrowth? At least we shouldn't be worrying too much about FI flows?
Well, we were worrying about FI flows in the first 2 weeks of January, and look at how smartly they turned around in the second half of January, but just at the whiff of interest rates coming down. So I think India remains in that situation where if the global situation is worrying but not disastrous, India will outperform. The moment it becomes an absolute trade globally from a relative trade where we are not at this point in time, I think then everybody gets hurt. So we just want to avoid that situation where there's a complete global collapse, in which case India will fall with other markets. But things are simmering on the margin like they are globally. China is a problem, commodity markets are a problem, crude goes up for 4 days and then in 1 day gives back all its gains. These are signs that things are not quite settled globally, but we are not at the disaster point yet, and India still benefits from that relative trade and relative pool of money. So one needs to be very, very vigilant about the global situation, but for now, I think the next 3 weeks belongs to our local events and see how they play out rather than worrying too much about the global market.